Welcome to The Explainer. Today, we're going to break down one of the most talked about, yet, let's be honest, often confusing documents in India, the Union Budget.
You've seen comments just like this one, right? Every single year, they flood the internet, and it's because the budget can feel incredibly complex, maybe even a little disconnected from our daily lives. But what if we could change that?
Okay, let's dive right in. We're going to use a really simple analogy here, one that's going to make sense of all those big numbers and complicated terms you're about to see.
So, I want you to imagine India as one big joint family. All of us, as citizens, we chip in with our earnings. And the government, well, it acts like the head of the household, with the tough job of listening to everyone's needs and then deciding on the family's priorities.
Now, this is a really important point. Unlike a business, which is all about the bottom line, a government's main goal isn't to hoard money. It's to use that money for things that benefit everyone. Roads, hospitals, defense, education, the whole shebang.
All right, so let's take a look at how this huge family actually manages its money. And that brings us to three basic types of budgets.
A surplus budget. Well, that's almost unheard of for a country because there's just so much to spend on for welfare and development. A balanced budget sounds nice, but it's often totally impractical. And that's why most governments, including India's, usually run a deficit budget.
So, what does that mean? It just means that when the family's expenses are more than its income, the government has to borrow money to cover the gap. It's exactly like a family taking out a loan to, say, build a new room or pay for a child's higher education. And this timeline really shows you the planning that goes into it. It's a huge effort that takes months, and it mirrors our family analogy perfectly, right? Every part of the family is asked what they need before the final decisions are made. And it all culminates in that famous Halwa Sazamoni, after which the budget is officially locked in.
So, where does this big family get all its money? To make it super simple, let's imagine the government's total income for the whole year is just one single rupee. Where does each and every paisa of that 1 rupee come from?
Now, what's really fascinating here is the single biggest source of funds. Look at that. Even after collecting all kinds of taxes, from our income tax, corporate taxes, GST, everything, the government still has to borrow 24 paisa for every rupee it needs. That borrowing is what fills the gap to make everything else work. Okay, so we've got a pretty clear picture of where the money comes from. But the big question is, where does this massive family spend all that cash? The biggest slice of the pie, and it's not even close, goes to the Ministry of Finance. But here's the kicker. A massive chunk of that is just to pay the interest on all those loans we just talked about. That's the real-world consequence of borrowing, right? That interest payment is money that can't be used for a new school or hospital. After that, you can clearly see the other big priorities: defense, roads, and railways.
Every year, the budget lays out the family's big plans for the future. And this year, the focus was really squarely on long-term growth and building assets for the country.
These are pretty ambitious, forward-looking plans. Instead of short-term handouts, the idea is to build assets for the future. We're talking about huge initiatives, like creating a rare earth corridor to make our tech and defense sector stronger, investing in high-speed rail, and even setting up a brand new National Institute for Mental Health.
Okay, so now that you've got the basics down, let's put that new knowledge to the test. We're going to tackle a really important concept that helps separate what we might call good spending from bad spending.
So the crucial point is this. Capital expenses, like buying a new fridge for the family, build future value. They create an asset. Revenue expenses, like the monthly electricity bill, are totally necessary to keep things running, but they don't create a lasting asset.
All right, I'm going to list some common government expenses. For each one, I want you to decide, is it a capital expense that builds an asset, or is it a recurring revenue expense?
Just think about it for a second. Which of these are creating something tangible and long-lasting for the country, and which are more like ongoing operational costs?
So how'd you do? Did you get them right? Buying jets, building a hospital, upgrading railways. Yep, those are all capital expenses. But things like salaries, scholarships, and subsidies are revenue expenses. And understanding this difference isn't just a fun little quiz. It is absolutely key to figuring out if a budget is truly investing in the country's future.
This whole exercise really is to empower you, to help you become a more responsible and informed member of our national family, ready to ask the tough but totally necessary questions. For instance, experts have pointed out that even though the government's own economic survey called the falling rupee a major problem, the budget speech itself didn't seem to really address it head-on.
That's a fair question to ask, isn't it? And here's another point people bring up. There's sometimes a gap between the government's stated goals, like making life easier for the middle class, and the real-world experiences of honest taxpayers who face these unexplained delays on things like tax refunds.
And finally, a big one. A lot of people feel the budget should focus more on bringing new people into the tax net, expanding the base, rather than continuing to rely on the same group of compliant citizens to fund the nation's expenses.
Because at the end of the day, understanding the budget isn't just about crunching numbers. It's about understanding our collective priorities. After all, it's our family, it's our money, and it's our shared future. Thanks for watching.